Welcome back, Navigators. Today's video discusses ways to capitalize on the opportunities that arise from new market entrants upon their early moves, while managing the associated risks and higher volatility. Imagine the anticipation, a young athlete poised at the starting line. The crowd roars, a symphony of excitement. This is the electrifying atmosphere surrounding a company's initial public offering, or IPO. It's their debut on the stock market, a chance for everyday investors to grab a piece of the action. The allure is undeniable. The potential for massive gains, the thrill of being in on the ground floor of the next big thing. But like any high-stakes race, understanding the rules of the game is crucial. It's not just about the sprint. It's about pacing yourself, strategizing, and knowing when to make your move. The world of IPOs can seem like a jungle full of promise and peril, but with the right knowledge and a healthy dose of caution, you can navigate this exciting terrain. So tighten your laces, take a deep breath, and let's explore this world together. Step by step, this is your guide to understanding and potentially profiting from the exciting world of IPOs. Let's break down the jargon. An IPO, or initial public offering, is simply a company's first foray into the public stock market. Imagine a bakery known locally for its delicious bread, deciding to sell shares of its business to the public. This influx of cash helps the bakery expand, maybe open new locations, and ultimately increase its value. When you buy shares at the IPO price, you're essentially buying a small slice of that bakery. If the bakery thrives, your share, your slice, becomes more valuable. That's the potential of IPOs, to get in early and ride the wave of a company's growth. However, remember, not all bakeries become overnight sensations. Some may struggle, their bread may lose its appeal, and the value of your share might decrease. Understanding this fundamental concept of risk and reward is key to navigating the IPO landscape. Remember the early days of companies like Amazon or Google. Those who recognized their potential and invested early reaped incredible rewards. The prospect of finding the next big thing before it explodes in value is a major draw for IPO investors. Take the example of a company like Tesla. Early investors who believed in their vision of electric vehicles saw their investments skyrocket as the company grew into a global giant. While past performance is never a guarantee of future results, it highlights the potential rewards of identifying and investing in promising companies at their early stages. However, it's crucial to remember that these success stories are just one side of the coin. For every Amazon or Tesla, there are countless companies that didn't live up to the hype. This is why understanding the risks involved is as critical as recognizing the potential rewards. Investing in IPOs is not for the faint of heart. The stock prices of newly public companies can be incredibly volatile. Imagine a roller coaster, exhilarating highs and stomach-churning lows. That's the nature of IPO trading. Factors like market sentiment, industry trends, and even the overall economic climate can significantly impact a newly public company's stock price. These fluctuations can be dramatic and unpredictable, making it a risky playground for inexperienced investors. Think of it like exploring a new jungle. It's full of potential and wonder, but also hidden dangers. A seasoned guide, in this case, thorough research and a well-defined investment strategy, can help you navigate this unpredictable terrain. So, navigators, how do you approach this exciting yet volatile landscape? Firstly, knowledge is your compass. Thoroughly research the company going public. What do they do? Who are their competitors? What's their track record? Understand what the company does, its competitive advantages and industry positioning. Assess revenue, profitability, cash flow, and projected growth rates. Be cautious with companies that have high valuations but little or no profit. And if you believe in the company's long-term potential, consider holding the stock for a few years rather than just the initial post-IPO period. Secondly, identify a good entry point. IPOs can be very volatile on the first day, often spiking up and then dropping sharply. Wait for some price stability before entering. Many IPOs form a base consolidation period on their stock chart after initial volatility. This is when the stock's price settles down, providing a potentially lower risk entry point. Watch for key technical signals such as a breakout above the high of the first trading day, moving averages, or support and resistance levels. IPOs with strong trading volume, also shown on the stock chart at the bottom usually, more often than not indicate significant investor interest, which can lead to further price appreciation. Thirdly, don't get swept up in the hype. Companies with excessive media coverage or celebrity endorsements might be overvalued. Do your own research rather than relying on the hype. It's easy to get caught up in the excitement of a hot IPO, but remember, not all that glitters is gold. Sometimes, the best opportunities come from well-researched, under-the-radar companies. Consider the company's valuation relative to its industry peers. An inflated IPO price could limit future upside potential. Be patient, be strategic, and remember, slow and steady often wins the race. Since IPOs can be highly volatile, it's wise to limit your exposure. Consider allocating a small percentage, 5 to 10% of your portfolio, to IPO trading to mitigate risk. Investing in IPOs can be an exciting and potentially rewarding journey. It's about identifying promising companies early on and participating in their growth story. But remember, it's a marathon, not a sprint. Approach it with a healthy balance of enthusiasm and caution. Do your homework, understand the risks, and never invest more than you can afford to lose. And by educating yourself, staying informed, and making calculated decisions, you can navigate this exciting landscape with confidence. And who knows, you might just discover your own next big thing along the way. That's all for today. Until next time, take good care of your finances, navigators. And don't forget to subscribe and share if you found any value.